February started with a splash, theoretically connected to these tariffs coming or not coming, and we had seen it all in the cycles. Today is February 4th, and we are sticking with the basic understanding that the trend is starting to turn down into approximately March 10th through 12th area, and it's likely to be a jagged road down. In other words, it's not going to go smoothly down. As you saw, for example, it collapsed one Sunday, went up the whole week after that, but not as much. Then it collapsed the next Sunday night, went up the whole, well, so far it's not the whole week after that. It's going to continue to be like that. So the next high that we're looking for on the super short term is coming in on Sunday night, on the 9th, and probably if you're thinking about getting out or being short, you might consider Friday this week, the 7th, as the last point to not get hurt. There is possibly a really sharp break coming from the 10th to the 12th or 13th of February. It comes up several different places in several different cycles. It even aligns, believe it or not, with the 1987 market and the October crash. However, don't get nervous. It's not going to be a huge decline. The longer term pattern is still bullish. And this correction is there mostly to shake out the shorts before another resumption of an uptrend that should start in March and potentially even in May, with another layer of up and down going nowhere, basically until May. Okay, so don't get attached to a bear market starting philosophy. It's probably not true. Don't get attached to buy it now, you'll never be able to get in again. That's also probably not true. But if you want to trade for 2-3 week swings, then you're in good shape. I also recommended to my students that if there's a huge decline between the 10th and the 12th, I would get out. And there should be another bounce in February that goes up, even potentially as late as the 26th of February. So it could go sideways to up again, like it's done 2-3 times now, and then come down from the 26th of February to the 10th or 12th of March, completing the decline and potentially giving us our 10%. Okay, we're not expecting much in this decline. So the reasoning again for our assumptions has been the 147-week trading cycle, which called for a high on the 31st of January, and the pattern was very, very similar. It had a sharp rally into that. We did as well. And that calls for a decline, and it's fairly clear that decline goes down at least until March, potentially longer. We're also looking at 3 times the 54-week cycle, which called for a high on February 4th and potentially even as late as the 10th. But that one is still in play as well, and that calls for a decline after that. And we also mentioned the Venus-Saturn conjunction 3 of those ago had a high on the 27th of January, and that actually happened already. So 3 cycles that we're looking at that are intermediate term are all saying the market should go down for a few months. And one of them is saying the market is going way higher, but much later. The other thing that you should note, and it's very important, is we just saw a very significant astrological combination take place with Venus conjunct the North Node. And what we did, and I have the statistics for you, when Venus is conjunct the North Node in the last 25 years, it is bullish for the next 6 months at least. So this market's not ready to collapse. This particular location of that event in the zodiac is much like 2006 and 2005, both of which initially started with a decline for a month or so, and then it resumed upward. We're expecting a high at least in August, and possibly even later than August. If it does like 1987, it'll make a high in August and it'll hang out until October before it falls apart, okay? But the beginning of a downtrend, we're expecting around August 5th. But the probabilities of the market going higher, at least until August, is 85%, okay? So relax, trade the thing on the swing basis. If you can catch a nice profit on the downside, fine. But relax, because this market's going to be volatile both directions. And probably before it's over, be much higher than it is now.